The Canola School on RealAgriculture.com is brought to you by BASF Canada and Invigor Hybrid Canola.
And this is Real Agriculture, here today for an episode of Canola School, getting the chance to catch up with Jonathon Driedger of LeftField Commodity Research. We're going to be talking about commodity prices and canola. So welcome, it's great to see you.
Yeah, well, thanks for having me.
Okay, so first off, there is a lot happening in the markets right now. Can you just kind of give us a brief overview of what things look like in the industry?
Oh geez, when it comes to canola, it's hard to do a brief overview because it just is like canola is sort of like ground zero for all the policy uncertainty that's going on. We have tariffs on seed from China, we have tariffs on oil and meal, biofuel uncertainty in terms of U.S. policies, which is impactful on canola. All of these things are political decisions. No one knows exactly how or if or when they may or may not change, and of course all that is impacting prices. And so it's we grew a big crop in Western Canada. Obviously, because of the Chinese tariffs, exports are slower. Biofuel uncertainty, Chinese tariffs crushes a little bit slower. All those things are kind of dragging on prices, at least for now. And yeah, that's kind of all that stuff is going on here at the same time with canola. So it's kind of like I said at the outset, it's kind of like ground zero for all the policy what ifs and uncertainties. It's all happening in canola.
Right, and I think growers are fairly accustomed to weather and volatility in that. Now, it seems dismal. However, there are ways growers can kind of insulate themselves from some of that. And I mean, we're still growing canola. So what does that look like?
Yeah, I mean, and again, because of all that, one of the challenges that you mentioned, weather, some of these uncertainties, volatility, I mean, farmers, the industry is accustomed to that. I think one of the challenges with a lot of the things that canola is facing, and U.S. soybean farmers, similar, those some parallels and so on, and other, peas in Western Canada, a lot of these policy issues. The hard part is you're sort of trying to anticipate a politician or a policymaker, making a decision at some point, and that just adds a different kind of uncertainty and unpredictability on what's going to happen in the marketplace. So, but within that, I mean, growers of course still have to make selling decisions for their canola, and so I mean, I think a couple things, and again, there's the what if potential if maybe things open up with China, and as we heard today, there's maybe cautious optimism, but I think it would be presumptuous to assume that suddenly things will open up. I think that would be probably not the right way to spin some of the cautious optimism that was put forward. So you kind of have this what if scenario. I think there's sort of, you want to be an optimist, and you also got to be a realist in some ways. And so the realist, part of me would say that I think we sort of have to almost move forward assuming that things won't open up, because they might not open up. And so, I think even in that scenario, we're not necessarily pessimistic about canola prices. I think that a lot of the negative news is priced into the market. I think as canola prices are soft here in Canada, I think that maybe encourages some additional demand into other export markets, as we heard a little bit today as well. So I think there's reasons why we're maybe cautiously optimistic about canola prices as we get on into the second half of the year. There's a real strong seasonal tendency for canola prices to kind of have a bit of a bounce as we get into spring. So I think growers can maybe keep sort of one eye on that, and yet also not get, I think if we do see a bit of a move higher in the markets, I think those would probably be selling opportunities, assuming we don't open up or we don't get an opening of China. And that's the big what if. So I think, growers, obviously, they got to probably think a little bit about, where are they at in their sales? Are they sitting on large inventories, or are they reasonably well sold? If they're reasonably well sold, it's easier to be patient. If someone is sitting on large inventories, way undersold, you maybe want to have a little bit of an itchier trigger finger, because if we all of a sudden do end up, getting later on in the year, we don't open up to, get an opening up from China, we might end up sort of dragging along here as we go. And so that's, trying to strike that balance a little bit, I think is one of the challenges for growers. And again, it's a big what if that may happen and may not happen, and no one has a clue, in terms of how that unfolds.
What are some of the key signals that you would say, hey, watch out for this, and this might be a time to sell or to hold back?
Yeah, I think, one of the things we'll be watching real closely is basis levels. We know basis levels are really soft in most places in Western Canada. I think if we see some improvement in some basis levels, I think that maybe be a little bit of an encouraging sign of maybe more business getting done. That would maybe make us, kind of a little bit more encouraged that maybe we do see a little bit of a bump. But again, I think probably, again, I'll use the phrase a little bit of an itchy trigger finger in terms of moving sales along. I don't think we want to get too far ahead of ourselves or be overly optimistic about prices without a reopening. So a couple things, if we, for example, get some biofuel policy clarity in the U.S., that probably gives soybean oil a bump. That probably results in a bit of a jump in canola futures prices. I think some of those sorts of things maybe would be good opportunities to probably continue to move sales along a little bit for growers. Again, how aggressive a person wants to be or not, I guess depends how optimistic you are that we open to China, and it might happen before this recording even gets put on air, or it might not happen for the next 18 months, and that's just the reality of it. So yeah, I think that's a couple things we'd be thinking about from a grower perspective.
Right. And what are some of the big questions that you get asked when speaking with growers?
Yeah, I think it's just, kind of what do things look like here going forward. And I think everyone sort of knows we're just, again, have this cloud of uncertainty. But I think people wonder, okay, well, does China have to open up to Canadian canola because they need it? And I think the short answer is they've been proven in the past that they're willing to make do without it. So I don't think that, for example, China's hand will be forced per se because they need our canola. So that's one thing I caution farmers about a little bit, is assuming, they need our canola, therefore they'll open up. They might open up, but it's not necessarily because they don't have any choice. They want it. We heard that today. The Canola Council was here sharing some stuff. They most certainly want it. But their hand's not going to be forced. They don't need it. So I think that's one thing to be a little careful about. Again, which doesn't mean they won't open, but it's not like they'll be forced into opening because they need our canola per se. They will get by with less canola in the past, importing meal, soy meal, importing other veg oils, those sorts of things. And so, that's one of the things that we sometimes get asked about. So, but yeah, I think ultimately we're cautiously optimistic. We'll export a little more into some other countries. One of the things we're also watching really closely is how much is Australia going to be able to export to China. So they've been shut out of the Chinese market for a long time. They've started to export a couple of cargoes of canola to China. Does China open up more? That will be positive for Canadian exports. Maybe we backfill into some other markets. Again, that's a great big policy what if, where we're sort of hanging on the decision of a politician or a bureaucrat somewhere. We don't know how it's going to unfold, but kind of one other thing we're watching here closely.
Right. And any words of encouragement for growers in this very volatile season?
Well, you know what? It always does look worse at the bottom. I think back to some of the conversations we were having with farmers in September, and it just looked so dismal. Prices were just, grinding lower across the board for all crops. Basis levels were weak. Some crops were no bid, and it always looks most dismal at the bottom. I think for growers, especially if you can be a little bit patient, again, I don't think we want to have unrealistic expectations about how high prices can go if the market doesn't reopen. But at the same time, we're not so dismal that you just want to chase it lower. I think, like track basis levels in your local area, look for some of these pops or bounces. They inevitably happen as part of the ebb and flow in the market. All of a sudden, again, there's maybe some optimism about U.S. biofuel policy, soy oil bumps up, it spills over into canola. Those sorts of things will happen. Seasonally, there's a real strong tendency for prices to improve as we get into spring. We think that's likely again. Also, again, as mentioned a few times, not to be too unrealistic if we don't open up to China, but that doesn't mean there won't be opportunities maybe if the growers can take advantage of to kind of move some sales along. So that's something I think I'd maybe keep in mind.
That's wonderful. Well, I want to thank you so much for your time.
Great. Well, thank you for having me.
And that was Jonathon Driedger on Real Agriculture.